What's up, guys? It is Friday, May 26th. It's 9:58 a.m. and this is going to be a crypto market update. First off, we're going to cover the market drivers. So the bond yields, the dollar, stock market, gold. Then we'll go into Bitcoin dominance, because Bitcoin dominance is looking a little toppy right now. Then we'll go into XRP individually, and then XRP dominance, XRP to Bitcoin, XRP to Ethereum, then XRP dominance to all the other altcoins dominance, because we're going to see if XRP is ready to take off. So we'll dive into that. So if you're new here, subscribe, hit the notification bell, leave a comment. Let me know what charts you want me to go over this weekend. It's good to be back at it, posting publicly. So I'm going to be doing some more market updates, newsletters, deep dives this weekend. Hopefully you can catch up on all the crazy news that's been dropped over the past month. So let's dive into it. So bond yields right now, at 3.835%. So I'm going to pull up the new tool that we got, the Fib Forecaster. So Stargate's Fib Forecaster right here. And let me actually hide some of these indicators. So here's what we got. All right, so we got the Fib Forecaster here, and let's just do a little run through as far as how do you read this, right? And what is this all about? So with the Fibonacci retracement and then extension as well too. Here at Stargate, we talk a lot about the macro, medium, and micro timeframes and how it's so important to look at all three, because all three coincide with each other. Just like if you were to do something, and this is like a life kind of principle as well too. If you do something every day, like the micro, right? If you do something every day on the micro that is beneficial or good for you, medium term, you're going to see some reward, right? But then in the macro, you're going to see huge reward. So that compounding effect, because the micro plays into the medium, which plays into the macro. And that's the same with charts as well too. So certain things will line up. Like if a micro move breaks out of a key Fibonacci level, and we're extending on a micro move, that could then kind of spill over into the medium move or the medium Fibonacci levels, which could then spill into the macro Fibonacci levels. And actually real quick, I want to give you an example of that. So if we pull that up on the dollar, all right, so we pulled this up on the dollar, right? And you can see how we have different kind of colored levels here. We have red, we have yellow, and we have green. So think of it as a stoplight. So red will be the micro, yellow will be the medium, and green will be the macro. So basically it takes this Fibonacci level, so the 0, right? And then, it takes this Fibonacci level. So this is the 1. So it starts here, and this is the micro move. So we take that low to that high, we stretch it out, and basically it outlines where the 786 is. So if we see here, the red is the 786, just like 786, I just drew it manually. Okay, so then if we're looking at the medium move, right, it's taking this 0 and taking this 1. So we grab it from here and then we pull it down, and you can see how the 786 is aligned right here. And then we actually broke out of the 786 on this medium move and extended to the 1618. So see how it's matched up. So basically we automated drawing the Fib levels on a micro, medium, and macro level and finding confluence between those levels, whether it be on a retracement or an extension. So it's next level shit. You don't have to worry about drawing or where to draw the micro Fib or the medium or the macro and kind of deciphering that. This is done for you. And look how we could replay back in time. It changes with the price action. So it will change. And so I'll play this replay here, and we'll see it in real time change. And I'll hide everything else but the Fib Forecaster. See how it's changing? And I'll slow it down. Look at this. I mean, like, you can't make it up. This stuff is so next level. So see how the micro, the red, is changing for the Fib levels, and then the medium, which is the yellow, is changing for the Fib levels here, because it's adjusting to the most recent data that came in. Then the macro is changing as well, but the macro will change less because we're looking at a bigger time frame, like next level stuff. So the micro is going to move a lot because it's tracking the micro moves. So it's taking that new data and matching it up to the newest kind of levels. And then the medium will move, but not as much as the micro. And then the macro won't move as much. Yeah. So next level stuff. So as you can see, so if we're looking at the macro, we have this high down to this low. And we have the 786 sitting right there. So this is the Fibonacci retracement. We absolutely need to get rejected by the 786 for the dollar, so we don't then break up above here and then start targeting extension levels, because with the dollar rising, that's terrible for crypto. So we have the macro plotted, but look how on this medium move, right? So we took this high down to this low, and we broke out of it. So we broke out of the 786 here, which is that yellow right there. So we target the extension levels in the 1618. We pressed above right now, but look how the 2618 extension is coinciding with the 786. Well, the 2618 extension on the medium move is coinciding with the macro 786 retracement. So you want to look for overlap, and those are key levels where you could find support or resistance at. Just like, all right, if we were to break the 786 on the macro and the 2618 on the medium extension, then likely the next level would be the 4236 extension on the medium, which is the 1 on the macro, and retesting these highs. Next level stuff. I'm so excited to finally be able to get this one done. And we have a bunch of new stuff that we got done as well too, but I just had to show this one today. So let's go back to the bond yields and cover where we're at with that. So the bond yields right now, if we're looking at it right now, we hit the 1618 extension and the 2618 extension here. So the 2618 on the micro and then the 1618 on the medium. Right now, it's not picking up this whole big move because I have to stretch this back. And now it picks it up. So now it picks up this move. So the 786 is sitting right here at 3.91. So that's the level we need to get rejected at, which is coinciding kind of with this 2618 on the micro. So this is our key kind of zone. And we're going to make an edit to highlight the zones where these kind of overlap. But this is our key zone. And we're at it right now where we need to find a rejection point. If we break above that with force, especially because it'll break this trend line coming down as well too, we could have some trouble ahead, or with the bond yield selling up, with the bond yield spiking. And then, the dollar could have a rally off of that, but we'd have to watch the dollar at that point. But the bond yield spiking would mean that likely the US defaulted on its debt. So we're hanging at this key moment. And with the end of the runway here soon for the debt, if we go to the debt clock, it's coming up. They said June 1st, but they said it could likely run until the middle of June. But right now we have 561,720. In fact, we're getting close. We are getting close. 188, 187, unreal. So there's got to be some announcement here. I mean, it's Friday, and then Monday, the stock market, I think, is closed because of Memorial Day. So hopefully we see some news out here today, or if anything, it would happen on Sunday or Monday, maybe something like that. But definitely heading into a caution zone and kind of caution time. But that's the bond yields right now. We need to see that roll over or just kind of stall out here. If we go to the dollar and we pull up the momentum on the 3 hour, we're crossed down. On the 6 hour, we are crossing down. And then on the 12 hour, we're still headed up here, but we do have the stock RSI crossing down. So that's a good sign that we could be rolling over here. Also, we had outlined, I think in the video, don't even know when, but a couple days ago, maybe, this as a trend line that we were riding up here at this point. Then we broke below it, got rejected. Even though we're higher than this point, we do see the momentum and the strength of this move weakening. And that's kind of outlined by this MACD, how it's getting lower and lower. And that's just because we're still rising doesn't mean that there's not hidden bearish divergence happening. And that is the case here, because we're seeing that we broke the trend line down. We're riding on top. We can't get above. If we were to kind of blast through above, hold that support, then we have a parabolic move in the dollar happening. But I don't see that being the case currently right now. So let's pull up the Fib forecaster and see where we're at. So right now we are at the 1618 on the medium extension. We're trying to break above it and hold that support, but right now we are battling with it. If we look here, we had the 2618 extension on the medium time frame, and then the 786 retracement on the macro time frame. So this is our key kind of line in the sand to get rejected by 104.80 to 104.70 here, and that's not quite much higher. So if we do rally up, I'd expect for us to get rejected here, and then we could even draw another trend line. We had this one drawn before like that, which we've gotten rejected by, but we could draw another one like this to see kind of the momentum keeling over. So if it breaks this trend line, I'd say, yeah, we're gonna roll over. If we look at the 1-day chart, we are still up here, but with the 12-hour, we are crossed down. So if we can have a pull down right here and kind of close below 104 by the end of today, likely the daily chart will start to roll over because the time frames, micro, medium, and macro spill into each other. Very important to understand that concept. So that's what I'm seeing with the dollar. If we go to the weekly chart, since we're going to see the weekly close today, we do have a pop up here, but and we're getting close with the pink crossing the blue. I don't think we're going to do it. I think we're going to see this snap back. This is going to snap back up. This will roll back over. This will curl back over. And then we'll see the dollar kind of roll back. We had kind of outlined this as far as one more pop up in the dollar because we spent weeks trying to break this level. We couldn't. We rounded out. We popped up here. So I would say that, and we said one more pop up in the dollar, then ultimately a rollover. And that would be the one that would break this key macro level. And we covered it many times. If we kind of scroll all the way out, we look at this macro level here around 99 to 100. Yeah, 101. If we break that, if we break below this, we're going to go into a hyper boom with crypto. Absolutely. Because every single time where we kind of poked our head above this and then broke down below, big bull run. Poked our head above, then broke below, big bull run. This time we overstretched by a ton. So when we break below here, I think we're going to then overstretch by a ton to the downside. And it's going to be the biggest crypto bull run I believe we've ever seen. Yeah, because I think also too, we'll break this key support because we had a little kind of deviation out, came back down to here, deviation out, came back down to here, big deviation. I think we're going to come down to here and deviate on the downside as well. Yeah, so interesting times are ahead. Definitely interesting times. So let's look at the US NAS 100. We're breaking higher today. We're at like 14,100. We actually managed to, on the 3-day chart, get above the 200 moving average here. I believe this is the simple moving average, the red one. The yellow one is the exponential moving average. I had to look into the code in that. But yeah, we're popping up. I mean, 14,100. Let's pull up the Fib forecaster here. So right now, with the Fib forecaster, so on the micro time frame, actually, we're getting close to the 1618 extension. And then on this medium time frame, we are at the 2618 on that one. So the thing is, when it comes to like using the Fib forecaster on like stocks or bonds, this, that, and the other thing, it needs to stretch all the way back. So maybe if I put it on a 1-month chart, yeah, now we're getting some better levels here. So it will fluctuate. We got to go to a 3-week chart. Right now, we are seeing on the micro a breakout above the 1618. So I would say the next target is 14,744. And then if I were to just pull the regular Fib right now, that's probably coinciding with the 786 of this macro. So I'd take this high down to the low here. No, it's coinciding with the 702, but the 786 is just a hair above, around 15,253. I think we could press up. Well, actually, let me look at this real quick. So we're getting close to the 786 from this level down to this, and we're actually at it right now. So if we can pop up above 14,200, we're likely going to melt up to 14,750 to potentially like 15,000. And at that point, we got to look at the momentum and really check to see if we're seeing the momentum indicators roll over, because that could be a moment where maybe the debt default happens, bond yields spike, stock market rolls over. We see gold, silver go off, crypto go off, but we're going to have to wait until we get more kind of narratives and clarity into kind of what's going to happen with this debt thing. Right now, though, on the 3-week chart, which the candle closes today, we have the pink crossing above the blue, and we have the MACD rising still, and we have the TSI heading vertical, ready to cross above that 0 line, which is so key. Stock RSI is up here. RSI is above the 50 line. So like things are looking good. And we reclaimed the EMA ribbon. So to have this candle close like where it's at today or even a little bit higher, it's truly nuts. It's truly nuts. And then we got a 3-week buy now, not back in March though. Last time we got a 3-week buy now on the US NAS 100 was May of 2009 after the great financial crisis. And then we just rallied on from that point. So could the dust be settled? We'll have to see here by the end of June. We'll likely have our answer for that. So that's what I'm seeing with the US NAS 100. If we go to gold right now on the daily chart, we have a prepare to buy soon. We still got to wait for that buy now signal. Like back here, we got a buy now and went up, buy now, went up. So let's wait for that. If we check the 12-hour chart, let's see if we got a buy now there or not. So we have a prepare to buy soon on the 12-hour, and it's likely by the end of today, if we rally up with gold to maybe back to 1980, we'll get that 12-hour buy now signal. So that's looking pretty positive. And I remember covering gold weeks ago saying that, hey, if we roll over here, it's likely we're going to retest a 200 moving average. That's what we did last time before kind of rallying up again. So we tested it. So maybe we pop up, back down just like this right here. And then we continue our rally for gold because the macro direction for it's up. If we go to Bitcoin, Bitcoin's getting a nice bid up today. On the 1-day chart, we're looking at the MACD ready to curl in and cross the green. Same with the TSI. If we look at the stock RSI, we're actually crossed down, but we maybe something like this where we cross back up. We have the 2 prepare to buy soons on the 1-day chart. And then if we look at the fib forecaster, and we're on the 12-hour chart right now, we're reclaiming the 200 moving average on the 12-hour chart. Broke it momentarily, but it could have been just like a fake out to reclaim, and then we could start to rocket up here. We need to get above 27,150. That's a 786 of this micro move. And then ultimately the level 27,500 to reclaim these highs here. And then likely if we do that, we'll rally up to the 28,500 level, which is, I would say probably the 786 from here down to here or close. Yeah, the 702, very close to it. So yeah, I'd see that being the case. If we go to the 6-hour chart, let's take a look at that, see how we're shaping up here. Yeah, so those 786s that I just mentioned, that's where the 6-hour 200 moving average is. So definitely need to get above that, hold that support so we can then start to rally up here. And then we have this trend line coming down like that. And that coincides with that level as well too. So definitely a must to get above there. And I would feel so much better getting above 28,500, maybe 29K. To get above that 786 there. And then likely we're going to take another stab at 31,500. So that's what I'm seeing there. 12-hour chart looks like it's going to cross up. Well, it is crossing up right now. But if we look at the MACD, looking like it's going to cross in. Same with the TSI, looking like it's going to cross in. And I think we have some, and if I clean up this chart, I think we have some hidden bullish or just some bullish divergence. Let me delete these and then hide this stuff. Yeah, so we have the TSI with a low here and then a higher low here. And we actually have a equal low as well. So if we go to that, yeah, so low, way higher low. And then we actually have a low and then an equal low. So we got some bullish divergence there that's happening. And the candle that's happening right now is looking pretty solid. I definitely want to see that pink get above the 50 line and cross above the blue, and the blue come down, and see the 12-hour stock RSI cross above the 50 line, because that's in the past, the 12-hour stock RSI getting above the 50 line has led to pretty nice rallies. So that's what I want to see happen there. If we go to Bitcoin dominance, if I go on the 1-week chart, we have the sell warning. I still got that. We have the TSI getting close. We want to see that cross down and the MACD cross down and the stock RSI fully get below this 50 line, because then we'll see the Bitcoin dominance dump off. But if it dumps off, we want to see Bitcoin either go up. We still want to see Bitcoin go up or maintain stable. Bitcoin dominance fall off. And then that will likely result in all the altcoins melting up. So that's the scenario we want to see. So if we go to XRP now, actually, let me go back to Bitcoin real quick and cover kind of where we're at on a micro time frame. We are getting a nice pop up right now. And we are seeing this start to rally up. So this is good on the micro time frame, 26,692 right now. If we go to XRP USD, we got the fib forecaster up. We are at the 2618 extension on this micro kind of move right down here. If I go to a lower time frame, you'll be able to see it better. So it took this high down to the low. We broke the 786, retested it, immediately shot up to the 2618 extension at 0.4671. And then we have the 786 actually of this medium move right here, which we got close to testing it, not really. But if we can take out 0.4689, we'll rally up to that 47.5, 48 cent level. And likely I would say we'll actually shoot higher and we'll head to probably like 50 cents, 52.5 cents, because we have this macro fib now, and that's taking this high down to the low, and where it says the 786 is around 0.5478. So if we see those stars aligned with Bitcoin kind of staying flat or heading up here, Bitcoin dominance fall off a cliff, then likely XRP, what's a 10% move? We see that all the time in crypto. So it would likely bring it up to the 786 up here, 2618, which would be a 13 to 17% move. And at that point, we need to get above and hold that support. But let's go out now to a very high time frame, because now I want to dive into like the nitty gritty of XR. You know what? Actually, I'm going to save that for a follow-up video today. So subscribe, hit the notification bell, leave a comment. Let me know you're excited for that XRP deep dive analysis, because we're going to uncover if we're truly at the moment. I've been saying for months that I do believe that's the case, but also we got to look at the facts and the charts to see if they line up. So I will save that for later today. Subscribe, leave a comment, leave a like, and I'll see you in the next video.